Expert Dojo, we are early stage venture capital with a strong focus on go to market and growth. Much of early stage VC is around fundraising, but if you can nail growth and you can actually help your business by generating sales, the investors are going to want to come to you.
All right. Brandon Gerson is an entrepreneur, salesperson, venture partner, and angel investor. Throughout his career, he has co-founded 3 companies. 2 were small exits. 1 was a small failure. And he's now working to ensure 1 or more of his portfolio companies delivers a big exit. At present, he oversees deal flow and pipeline management at Expert Dojo, one of the world's most active startup accelerators. In between professional endeavors, he is a blessed family man who's working with his wife on raising 2 little girls to become future leaders in the free world. Brandon, how are you doing today?
I'm doing well, Harry. Thanks for having me. It's great to be here.
Yeah, I think the 2 things that I love about your bio is first, as you know, I love the name of your accelerator, Expert Dojo. I always tell you like, hey, when can I come to the dojo? When am I going to be invited to the dojo? So whoever came up with that name should definitely get a raise. And then number 2, you're honest. You're an honest guy. You're like 2 were small, 1 was a failure. So I'm going to expect a lot of candor and insights from you in this interview today. How does that sound?
No, that sounds spot on. And, I think it's important to recognize that we're all fallible, especially as investors, but we want to make sure that we learn from our mistakes and make sure that we make positive decisions and strong impact moving forward, especially as an investor. So yeah,
Yeah.
glad to be here and let's get into it. Yeah.
Definitely. No, I like that. And I think it applies to not only investing, but business and life. And, my day job with the rideshare guy, I like to think that it was a lot of skill and maybe some luck. But, I always, when I do interviews about how I grew my business, I try to always bring up, the 5 sites that I started before that were basically a failure or, didn't have anywhere near the same kind of result or exit. So I think definitely good advice there.
Yeah, for sure.
Awesome. Well, I've been excited to have you on for a while, Brandon. And I know you and I have been friends and, we've been exchanging deals and we have a lot of synergies and, kind of really have enjoyed seeing your growth and your path. So tell us a little bit about how you first got into investing. Maybe we could start, since you are an angel investor, tell us about your first angel investment and kind of how you got into this wild and wacky world of angel investments.
Yeah. So my first angel investment actually is a bit of an outlier. I invested in a hotel in Nicaragua 11 years
Mm.
ago. And so that's not really like the common, more like tech enabled stuff that I invest in nowadays. But I can proudly say that project is still going on and it has returned a decent amount of capital. And I'm still bullish on the potential upside of that endeavor. So,
What inspired you to do that deal?
well, I saw a lot of potential in that nation being an up and coming destination. I used to live in Costa Rica, which is a
Oh, cool.
neighboring country. And I used to travel to Nicaragua a lot. And the way I kind of joke about it now is where Costa Rica is still a very popular destination. A lot of people go there.
Yeah.
There's a lot of tourism and development. Nicaragua is still kind of like the pre-seed version of that, where I think Costa Rica has kind of made it to their Series A, if you will, to use a terminology that can maybe resonate with the folks listening. But so much more raw and development needed and polish needed. But I
Yeah.
think it's a really good opportunity there.
Yeah, I that to be honest. I mean, I really like that your first angel investment was what was it? It was a hotel. Is that what you said? You were basically
Mm-hmm.
an investor in some
Yeah,
hotel in Nicaragua,
yeah. Aqua
and
Nicaragua. I'll give it a shout
Aqua
out.
Nicaragua.
And if
Aqua,
anybody,
geez, that is a tongue twister. Say it one more time. Aqua Nicaragua.
Aqua Nicaragua. Just
All
Google it,
right.
and
Well, we got a couple
if you want to
gringos
go,
on
I
this
got you.
podcast, and so
Yeah.
we're struggling, or at least me, with the name. But I think it's cool because, one of the reasons why I got into angel investing was to really look at the breadth of different types of deals, stages, types of investments. And, like I probably wouldn't have even thought of this, but I mean, it's an investment, it's an angel investment. So I don't know where you think about that in your portfolio, but I mean, I think that's kind of one of the cool things about angel investing is you can kind of go far and wide and go narrow, whatever you want to do, right?
Yeah, yeah. I think, as my career has progressed and I've become more of a informed angel investor, I think now, I really think about scalability and
Hmm.
how businesses are going to market and the opportunity for really growth and returns. That was a wilder idea that I pursued. But,
Yeah.
I mean, yeah, there, like you said, there are different ways that investments can return
Yeah.
And, hopefully they don't go to zero. I mean, that's the main goal there,
Yeah.
but some of them can be paying distributions over a long period of time. Some of them, hopefully, you're just waiting on your big exit where you receive that large multiple that kind of can return an entire portfolio. I feel like now, that I've become more versed in venture capital and in understanding the way that returns are received. My personal thesis as an angel, and then also like the work that I do at Expert Dojo, working on our portfolio and investments over there, has certainly evolved. And now I think about things differently than when I made that initial
Definitely.
investment, which was 11 years ago. But
For sure. Very cool. Well, you got to start somewhere. And I'm
yeah,
excited to dig into Expert Dojo and your current role there and also learn more about this accelerator. But first, give the audience a little sense. I've got a few rapid fire questions about your angel investments and journey so
yeah,
we can sort of see what you've been up to. So if you're ready, I'll get started.
yeah, fire
Number
away.
one, how many angel investments have you made up until this point?
14.
14. All right. How many have you made this year or do you plan to make? We're here in August, so a couple more months of the year.
I've made 2 this year, and I feel like I'm looking at a couple things. I might make 2 more, so 1 a quarter.
Okay, cool. What's your average check size?
So average check size, I'll answer this a little bit differently. My mode, the most common check size that I write is normally 10K. My average is actually larger than that.
So you've had a
Yeah,
couple big ones. Is that what that means?
yeah, I've written a couple big ones where I had a lot of conviction,
Cool.
and I think that's important.
What type of startups do you look for and what stage?
I like pre-seed in terms of stage. I want to get in early. And in terms of startups that I look for, I'm a salesperson. I've made my career in sales, and I'm generally looking for founders who I can help move the needle at an early stage on actually driving sales. So, being able to lean in and help them, whether it's a B2B or a B2C product, understand how they're going to be building out their sales team, how are they going to build pipeline? How are they going to implement a CRM? How are they going to try to scale that up? So I'm looking for founders where, of course, the product and what they're building, I need to have conviction in that as well. But
Yeah.
opportunities where I can really lean in on helping them craft kind of how they're going to be selling and scaling up.
Are there founders that you like, particularly like maybe ones that are really good at sales and you can turbocharge, or maybe ones that suck at sales and you're like, wow, there's a ton of opportunity for me to help, or is it the whole gamut?
Yeah, both. I mean, it's nice to be able to chop it up with a salesperson who,
Yeah.
understands what needs to happen and be able to just be kind of like a comrade in that process.
Hmm.
But I've also invested in a couple of companies where they're like geeky product engineer kind of guys, and they don't
Yeah.
know how to go about like bringing the product to market. So I have experience with both. There's a lot of ways to skin the cat, but
Yeah. Where do you think sales sort of ranks on the categories or disciplines that are kind of most needed at, an early stage startup? I guess I think of product or, maybe engineering, sales. What do you think are the 3 or 4 main products and where does sales sort of rank on that stack?
yeah, I mean, I think it's paramount. And, because even before you're selling a product, you are selling yourself as an entrepreneur
Yeah.
to investors. You're selling yourself to potential employees. You're selling yourself to everybody, that you have what it takes to actually take this vision, this idea, and get it done. And, in terms of a discipline, you need to then be able to transition that into actually acquiring customers before too
Hmm.
long. And especially now in today's day and age, actually getting to revenue even before profitability, but like
Yeah.
actually demonstrating that people are going to actually pay for the product that you're building, that is of critical importance. And so, yeah, once you have, I mean, you need a product in place, of course, as well. And you need some engineering capabilities and you need dev type stuff.
Yeah.
But, I mean, even if you're not a very like gregarious, outgoing type of founder, you still need to be able to sell. So I think
Yeah.
That's
I
that's very
mean,
important.
life, I always feel like, I don't know how original this thought is. I'm sure someone else has said it, but I feel like life is all about sales. I mean, even on the personal side, right? If I know you and I are both married, like convincing a woman or man or partner to marry you is literally sales, right? It's like, okay, let me take them, text them. Where should I take them? When should I follow up? How many times should I follow up? Right. I mean, that's literally like the principles are kind of pretty similar. Do you feel that way, or am I way off base?
No, absolutely. I mean, that's, not only in our species, but in all animal kingdom. I mean, you go back to that's survival of the fittest, Darwin,
Yeah.
I mean, you need to be able to assert yourself, to have confidence, to be able to
All
find
right.
a
So
mate
you
to
dodged my
procreate.
question. Where does sales rank? Is it number one, number two, number three?
Yeah, I think I mean, look, you need a product first that people are going to want.
Yeah.
You can't just, so I mean, but after that it's number two,
Then you got to
so
sell.
like,
Yeah. I mean, I
yeah,
think that makes sense. I mean, I guess we have seen some people sell without a product, but I
yeah,
think to, build a better foundation, you need something. And then obviously, I'm sure there's some case where you have the best, most amazing product market fit in the past 100 years and, people will find it, but that's obviously pretty rare. So I do think, yeah, I like that one and two option. What's one great sales tip for founders, or what's something that you sort of typically come in and you're like, oh, I know this is going to be a low hanging fruit with a new company that I invested in or that I'm working with, and let's get on it.
yeah. I mean, I think, like, thinking about it from a guerrilla marketing type of perspective, how are you going to break through all the noise? I mean,
Mm,
there is no shortage of noise, whether it's, like social media, outdoor type advertising, marketing. I mean, like,
yeah.
everything's in your face all the time. But I think it's really important to think creatively about how you can identify, first of all, you want to know who your target customer is, your ICP, and
What
then,
does
like,
ICP stand for?
your ideal customer profile.
Gotcha.
So understanding who's your buyer, right? And then thinking creatively about where do they spend their time? Where are they hanging
Hmm.
out? What is the pain that you're solving? And then how are you going to get in front of them, get visibility, and then, bring them through the sales funnel, the sales cycle. There's a mentality that I like to think about. There's a book called The Challenger Customer or The Challenger Seller, and that really focuses on identifying that there's key stakeholders within, and I'm talking B2B sales here,
Hmm.
which I think
Yeah.
most tech stuff that is in, this space would resonate with, where, it's like, okay, let's contemplate who are the decision makers that are going to need to all have buy in order to get a product sale like this across the finish line, and what points do we need to rally them around, common pains, common, need, greed, fear, that kind of stuff.
Hmm.
How can we, put something that's going to resonate with all those folks, and then how are we going to get visibility on them, and then how are we going to, like, reel them in? So that's the way that I like to think about, going to market with a product from a sales perspective.
Very cool. Love it. Well, I feel like we could probably spend a whole session on sales, but that's not the reason
Yeah,
why we brought you here. Although maybe it's a good follow up. So let's talk about your role at the dojo. So why did you join, and what do they do?
sure. So Expert Dojo, we are early stage venture capital, similarly to myself as an angel, and this will, inform why I'm kind of there. We're investing in companies that are on, in pre-seed, seed stage, generally with a strong focus on go-to-market and growth, really moving the needle at those early stages to help the founders kind of be in a position where, so much of early stage VC is around fundraising, but our mentality is that, if you can nail growth and you can actually help your business by generating sales, then the investors are going to want to come to you. You're not chasing, you're now, the belle of the ball. You're the
Got
one
it.
who's you're crushing it. You're really moving the needle, and you need capital to fuel that growth. And then, investors are going to take notice. So
Hmm.
at Expert Dojo, what the dojo is it's really focused on working with our founders to help them on a slew of sales and marketing tactics, which really will help them move the needle in those early stages. And I can dig into,
Sure.
tactically what all
Well,
that looks like. But
I think
yeah,
it's cool because it sounds like the focus is sort of more or less around the hype and the growth narrative and more about like, let's grow. Right. And I think that resonates with me because sometimes I'll get pitched ideas where I'm pretty skeptical. And I always say at the end, like, hey, sometimes I'm pretty nice about it, but it's like basically I'm skeptical. Right. But at the end of the
gotta be.
day, like, come back to me in 3 months, 6 months. If you're growing 20% month over month or, revenue is increasing, like, I don't know. Like I could be very likely I could be wrong or prove me wrong, right? Because at the end of the day, like it could be the worst product, or you could think it's the worst product or service or not resonate with you, or you're maybe not a user, but if they've got good numbers and they've got good customers, then I mean that's kind of all that matters, right?
Yeah, I mean, the proof is in the pudding, right?
Yeah.
So, I mean, if users are using the product, and we could talk about the holy grail of product market fit, which happens a little bit further downstream from us, but
Hmm.
the focus really is on, making sure that you're going to have customers who are going to want to pay for this, and they're going to want
Yeah.
to tell their friends about it, and they're not going to be able to live without it. And that's really what we're looking to find.
Very cool. So you've been a founder in the past, you've done some angel investing, and I believe you're now full time at the dojo, right?
Yes.
I'm on your LinkedIn. It says Director of Pipeline and Deal Flow. You joined in November 2022. So tell me a little bit, why did you make the jump to dojo? And, what was it that you're like, I got to take this job?
Yeah, I mean, we have a really good culture. We see a lot of really good founders, and I think
Hmm.
this has enabled me to be able to really work with a lot of different entrepreneurs and
Hmm.
also lean in a place where I do have good experience on, go to market, sales, marketing. And so really it was just a good fit for myself. And,
Hmm.
to I the my last endeavor, which we kind of joked about here a little bit in my bio, didn't really make it, and that was about a year ago where we kind of pulled the plug on that. And and so it was kind of trying to figure out what my next move was. Talking to a couple of the founders that I had invested in the past about maybe taking more of a full-time position, but I had been doing some scouting for Expert Dojo last year and had built a really nice relationship with our CEO, Brian McMahon, who he's kind of a startup whisperer and pretty
Hmm.
well known in the LA tech startup scene. And we had been just kind of, sharing deal flow, doing some scouting stuff. And he and I had spoken about taking more ownership over multiple things that we're doing at Expert Dojo. And, the magic was just kind of there, and kind of decided to jump in full time.
Very cool. Yeah, no, I think that's awesome. So I think you sort of mentioned this, but for any founders or potential founders who are listening right now, what specifically does the dojo look for? You said pre-seed and seed,
Sure.
some sort of product already out in the market. What are sort of like
Yeah.
the, black and white, if possible,
Yeah.
kind of guidelines of what you look for?
Sure. So, like all VCs, I mean, we want to see strong founders who have deep
Yeah.
domain expertise in the problem that they're solving, and we want to see that they're executors. We want to see that they know how to get things done. We generally will not invest in anything that's like pre-product. We want to see that there's something that
Hmm.
is starting to get into market, and something that we can actually help with, all of our sales
Yeah.
acumen and all that kind of stuff, like actually move. And we also want to see some early stage traction. So I think founders are way too quick to declare that they've found product market fit. Maybe we would say, no, like, look, that's some positive signal that the market is, you know, going to be receptive to this. There's some early validation, so we want to see that. And that can be in terms of, some really early customers, or maybe it's, you have some LOIs, or maybe, you have some good momentum from a
Yeah.
fundraising standpoint. Traction can show itself in different ways. And we also want to see that, you're building something that is important, right? I mean, I
Hmm.
think, not to knock any founders who are building something that in my opinion isn't important, but like, we want to see that you're building something that is gonna, benefit
Make a
people.
difference.
Yeah, right.
Yeah.
And so we're somewhat agnostic in terms of sector. I mean, we mostly invest in things that are tech enabled. I mean, we do have some consumer products and,
Yeah.
some CPG stuff in the portfolio, but generally, we want to see, we're doing B2B SaaS kind of
Yeah.
stuff, or ed tech, HR tech, prop tech.
Cool. And do you guys do sort of rolling applications, and what are the kind of terms once folks get into your accelerator?
Yeah, so rolling applications is correct. Our accelerator is unique in that it's not just like a 2-month cohort, or,
Hmm.
or something like that, where you come in, we add a little bit of value for a small period of time, kind of give you a logo to slap on your deck and move on. Like, that's not how we roll. We're really investing in our portfolio companies for 3 years generally. Our program
Oh,
is a
wow.
three-year program. And the way that it works is, when we make our initial investment, our initial check is generally $50,000 cash. And then we bring you into the portfolio, and our goal is to do follow on of $1 million within a 3-year period. And so that really helps us. We have some early stage conviction in the company and what they're building, and we like the founder and all the things that I just mentioned.
Yeah.
And so we're putting an initial check in, $50K. We want a little bit of skin in the game. That's exchanged for some equity, or, it's on a safe note. And then we want to then roll up our sleeves, really work with the founder on go to market, on really moving the needle in those first, years, where generally it's like a pre-seed, sometimes seed, depending on the company. But our goal is to then get them to Series A, and within that time period, we then want to execute $1 million follow-on investment and take a much bigger position at that point. So it kind of allows us to, make a lot of initial checks.
Yeah.
As you know, Harry, most startups will not return capital and they'll fail. But, that allows us to place a lot of initial
Yeah.
bets. And then the ones that really break through and crush it, we then, double down, or it's really 20x down.
Yeah. More than double, huh?
Yeah. Yeah. On those companies to really have a much larger position at that point.
Very cool. Well, I like the model that it's almost like, more of a partnership than, like a quick accelerator, right? Like, maybe accelerator is not the term, accelerator, you think about like a quick, movement. This is over a 3-year period. There's a lot of support in addition to capital plus potential funding. And so, I mean, I think all of that sounds great. I imagine if you're in the program, you're very happy. But what is the key thing you look for, or like what stands out on when you're reviewing deals or applications and you're like, wow, we keep getting founders with this, and it's like, we love that? Or, the ones that you've had successful, like, what do you tie back? If I'm a founder, what's something that, might stand out in your eyes? How would I impress Brandon at the dojo, basically?
I mean, you do need to be scrappy, and you do need to have that grit and
Yeah.
persistence. I think it goes back to also what you're building, and making sure that it is something that is really going to be well received by the market, and showing
Mm-hmm.
that you do have that early stage traction. I can't stress that enough. I think, there's somewhat of a debate out there of, when you're pre-seed investing, traction, how important is traction? And
Yeah.
I would say it's very important. Some people think like, no, you're pre-seed, you're just betting on a founder and their idea and their ability to execute. And I would push back and say, you might be flushing your money down the toilet if that's the way you perceive it. You need to see that there are positive things happening within this. And again, like, it could just be getting really, like, good investors on board and building momentum with that. That's like maybe the first place that I'd want to see. But, you want to see that that you're building, that the founder's building something, and that there are customers out there who are wanting it. Because, we talked about sales a little bit earlier. Even if you are in kind of build mode, early stage, you don't even have your MVP yet, or you're trying to create that, you better in parallel be selling, and reaching out
Yeah.
to your potential customers, and making sure that they're validating that what you're building is not a huge waste of time and money, right?
Yeah.
Like, you better know. And that's why I also mentioned, you want you want founders with domain expertise, who have, a history with the problem that they're solving, like
Yeah.
something that they just didn't wake up one day and decide, hey, I want to build this thing. Like, they've obsessed about it for many years, and have a deep connection with what the issues are, and know the nuances that are going to make it successful. And so, those are all the kind of things that I look
Yeah.
for.
I that last one, especially on a, I mean, there's lots of ways to be successful in investing and startup and as a founder. But I think one thing that I really like is, like you said, folks who like they've been obsessing about this problem. Like when the going gets tough, they're not going to give up, right? Like I've had founders who, like they thought this was a neat idea, an opportunity, and not at the first sign of trouble, but like I thought they pivoted a bit early. You know what I mean? Like if this was something that you've been thinking about for 10 years, you're going to like go hard in the paint until you're gonna squeeze every last ounce out of it, right? And I feel like I that tenacity. And it's not to say that, like obviously there's plenty of successful stories of people who pivoted or pivoted early or whatever, right? So it's not the only way to do it. But I guess I just like someone for like I'm helping companies as an investor and advisor, and like I don't want them to give up. Like I know they're doing all the hard work, but still like, hey, I'm on this journey too. So I guess selfishly, like I kind of don't want them, I want someone who's really invested in this problem and gonna, do every freaking thing they can to solve it.
Yeah, totally. I mean, and then you get into thinking about solo founders versus, co-founders or teams. And that's where just another point that you mentioned, like we've invested in many solo founders and we've also invested in many co-founders as well. And so there's also, that's something that we want to look for too when reviewing those applications is, what are these people's track record and, like, do they have a really strong partnership that are multiple people who know what they're doing? Or is this one person who, they've had success with previous companies in a similar space and now this is their evolution from those learnings? So those are also things that you want to think about.
Very cool. Well, the last thing that I wanted to ask you about is sort of a little bit more forward looking. What categories are you most interested in right now, personally, or, at the dojo, so that, if founders are out there thinking about, AI or, I guess it was crypto, I don't know what's hot right now, what's in vogue, but like, what are you personally kind of interested and excited in, like at the dojo, are you guys, hey, we like this category or we think there's a lot of opportunity here? Because obviously I'm sure you would love to see more founders, start digging into some areas.
Yeah, I mean, I am very bullish on AI, and I think that AI is going to solve a lot of really important problems that our humans are maybe taking too long to figure out, or not, or maybe making too many errors and things like that. So I do think that there is a really strong place for the right type of machine learning to really exponentially make things better and make tech better. I think it's really about understanding, can this business really scale in the early stages? I think that's what we look at. We're somewhat agnostic, right? Like in terms of, we're not very sector focused, but what we really want to see is, can these businesses and these founders really get to a place over the next 12, 24, even 36 months where they're really scaling and getting to a place where, you can raise your Series A, because that's kind of like the holy grail in the early stages.
So if it's more of a B2C, are there millions of people using this app? Or if it's a B2B, are there dozens of high quality, logo worthy clients, kind of signing up with this?
Yeah. I mean, when you think about it from like, a little bit of later stage, A, B growth stage investor standpoint, they want to see businesses that are going to be able to do, $100 million ARR.
Yeah.
Right. And if you work backwards from that, there's the principle of, triple double. Right.
Yeah.
So like, when you're at the early stages now, like, how do you get to maybe like using round figures, like if you think about $3 million as an ARR goal, if you can then triple that and go to 9 and then triple that and then go to 27 and then double that and go to 50 and then double that and go to 100, roughly, that's kind of a framework that I like to think about working backwards on, like, okay, and we're pre-seed, right? So like we're concept. So like, how do we get these guys to $3 million a year ARR and be in a position where they can then have strong foundation and fundamentals, where that they can then go on that trajectory and get to a place where, follow-on capital is going to come with those types of aspirations for the company. And so that, I know I didn't talk about like sector, whatever, because I don't, again, going back to the beginnings of the conversation, you can make money in all different kinds of ways from an angel
Yeah.
investing standpoint. But, like when you're thinking about securing your investment and trying to get somebody who's going to follow on to you from a VC standpoint, where you can have a potential exit on a secondary, or, like you can really have that company break through. Those are the types of, we think about it from a sales standpoint, more than like an industry sector, like that kind of stuff. It's more like, can these guys move the needle and get to a place where they're going to really grow in their own specific industry and be able to return capital?
For sure. Love it. Awesome, man. Well, I love what you're up to yourself personally, the model that you guys have going on at the dojo. And hopefully we'll be able to send some companies, some good founders your way from this podcast and going into the future. So if folks want to learn more about the dojo, where can they go? What are some good resources for them?
Yeah, I mean, sure. Just expertdojo.com.
Cool.
That's our website. I mean, if you want to apply, then I encourage all founders to apply. Something else that's worth kind of mentioning, like most VCs, we're going to say no way more than we say yes, right?
Yeah.
To founders looking for investment. And what we've been able to do, though, is because we're very inclusive and we really want to support early stage entrepreneurs in their journey. So the founders that we are not ready to invest in today, we've built a founder community, which is, we take no equity. There's no cost for founders to participate in it. But really, it's a less robust, less intensive version of our accelerator program. And it's a place where, founders come, and we have a meeting every Monday. We have a call for the founder community.
Nice.
And our GP, Brian, he participates on it and he leads it.
Very cool.
And yeah, and we, it's like we have all the content, we have all the coaching, we have all the curriculum, and so like it's a way that we actually allow for founders to take advantage of all that stuff. And
like the self-guided tour.
I mean, I think of it as it's kind of like our AAA.
Yeah.
So, cool. We'll say, no, we're not going to invest in you today. But like you said, you want to follow up in 3 months or 6 months or something like that. It allows us to kind of see how founders are going to continue to be persistent and continue to, be scrappy and try to build and all that. And then, we cherry pick the high performers out of there. So that's cool. A cool resource that, even if you do apply and we're not going to invest in you today, like I still always encourage founders participate in the founder community. Yeah. It's very low lift, high value. Yeah.
Very cool. Awesome. Well, very exciting to see everything that you guys are up to and all of the support and resources that you're providing for founders out there. So good luck with the dojo and thanks for coming on.
For sure, man. Thanks for having me, Harry.